Even if you acquire the skill to analyze a company or a business, you will still need to find a good entry point to begin your investment. How do you do that? By learning technical analysis and study how the candlestick form and how to analyze the candlestick. By combining the technique from technical and fundamental analysis will help you achieve your financial goal in a faster rate. First of all, we need to know what is a candlestick. A candlestick, the price action of a stock used in technical analysis. Candlestick charts show us the momentum and performance of the stock price. The candlestick is relate with supply and demand. And candlestick pattern is strongly affected by the emotion. Candlestick is a powerful chart patterns to use in trading. I personally use it to time the entry point of the market. Here is the bullish green candlestick pattern. This high point indicate the closing price and the low point indicate the open price. The blue arrow here showed the highest point and lowest point of price action. So here you can imagine the stock price open at low and buyer pressure come in and push up the price but getting rejected at the highest point and close at a high price. That's why it's called bullish candlestick. The emotion of the market is now greedy. Here is the bearish red candlestick pattern. This high point indicate the opening price and the low point indicate the closing price. The blue arrow here showed the highest point and lowest point of the price action. Here you can imagine the stock price open high and seller pressure come in and pull down the price but getting rejected at the lowest point and close at low price. That's why it's called bearish candlestick. The emotion of the market is now fear. There is also others candlestick pattern like Gravestone and dragonfly. These two candlestick open and close at the same price, but fluctuate in one direction. For the Gravestone candlestick, you can imagine that the buying pressure is coming in and push up the price. However, there is also selling pressure which push down the price to the opening price. This just means the higher price is getting rejection. The dragonfly occur in similar manner. When the price open, there is a lot of selling pressure which push down the price. However, there is also buying pressure coming up and push back up the price and close at the opening price. The lower price is getting rejection. Shooting star and hammer. Both these candlestick pattern is almost identical to Gravestone and dragonfly. But instead of closing at the same opening price, shooting star closes just above the opening price rather than closing at the same price. This work out the same for hammer candlestick pattern. Hammer closes just below the opening price rather than closing at the same price. There is also one candlestick pattern called doji. A doji fluctuate in price and it close same as the opening price. The price open and push up by buyer, then push back up back the seller. This indicate the indecision and uncertainty of the market. Buying pressure is almost identical to the selling pressure. Both buyer and seller are waiting for a better opportunity to execute their plan. Now you have better understand how each of these candlestick is formed. By combining several type of candlestick pattern together, you will be able to see a clearer picture of the market. Most of the traders are using these pattern to start trading. However, me as a value investor, I will be analyzing these candlestick pattern for a better entry point for my investment. People are comparing between fundamental investing or technical analysis for stock investment. But why not use both? By combining both the fundamental and technical analysis, you will surely be able to make money from stock market. And subscribe to our channel for more technical analysis on stock. Remember to like our video if you find this helpful. See you next time.